Hey everybody, my name is Joe Pivarunas. I'm the founder and managing editor of Nanalyze. We're a boutique media and research firm covering disruptive tech stocks for a broad audience of retail and institutional investors across the globe. Today's presentation is going to be on a stock called SolarEdge, and we've asked here, is this the best solar stock? Now, before we get into that, I just wanted to touch on some housekeeping. So the last presentation that we did on Palantir was probably one of the most popular, and it was also one with horrible sound quality. So honestly, I think we probably could have communicated more effectively using carrier pigeons. It was absolutely dreadful. And there was a couple reasons for that. Mainly that we switched to using PowerPoint to record these sessions, and it doesn't work very well. So for example, you're not supposed to speak when you're switching slides, which is very odd and doesn't work so well. So we're going to switch to using Demio for now, and then perhaps subscribe to a better solution called Prezi, I believe, a Hungarian firm. And then I also ordered the microphone that you see on this slide, and that should be arriving in a couple weeks. So hopefully we'll be able to improve the sound quality so that it's tolerable. Now, let's go ahead and start talking about SolarEdge. Now, the thesis here is around the growth of solar energy. And I pulled this from an investor deck of theirs, and it's quite interesting. So they're predicting that by 2050, solar energy will account for 38% of the world's electricity generation. You can see in gray where we're at today, and then in red where we're going to be by 2050. Now, if solar is in fact going to grow much faster than wind, and we have a fair amount of wind exposure at the moment with NextEra Energy, then we want to have some solar exposure. Well, we actually do in the form of a solar ETF, but we're planning to get rid of that because we don't want to hold any ETFs in our stock portfolio. Now, holding that ETF would have had mixed results based on when you decided to purchase it. So if you invested in the Invesco solar ETF, that happens to be the only solar ETF out there, if you invested in that when they first debuted in May of 2008, you'd be down 78% on your position, which is quite remarkable. However, if you invested in it 10 years ago, you would have realized 191%, but compared to a NASDAQ return of 332%, you would have been better off investing in the benchmark. It's quite remarkable that the NASDAQ has returned that much over the past 10 years. And then if you invested in TAN just 5 years ago, that would have brought you a return of about 268% versus the NASDAQ return of 118%. So while they say it's about time in the market, not timing the market, this is probably one of the rare exceptions. And what we did is we said, all right, if we're getting rid of this solar ETF, maybe we want to hold a solar stock instead. So we set out looking for solar stocks, and whenever we invest in a theme, we always look for market leaders. And to do that, we usually take a thematic ETF and then look at the top constituents, and that's what we've done here. Now, we vetted all the names in this list, and the two candidates that were left were SolarEdge and Enphase. And we looked at Enphase in a recent piece, and I'll put that in the description of this video. Actually, I'll put all the related research pieces that we've done to support this video in the description so that you can read those separately. And we decided Enphase wasn't our cup of tea for any number of reasons. And while doing so, we looked at some points of contention for SolarEdge. So firstly, 30% of their 2021 revenues came from two distributors, which they say here, Consolidated Electrical Distributors and Sunrun. Well, that was one thing. We don't like customer concentration risk. Second point is that they didn't provide any color on their exposure to utility versus residential versus commercial. So we don't want to invest in a firm that solely is involved in residential. And then thirdly, their business model's rather opaque in that we didn't see any sort of recurring revenue or anything that can support the firm when the solar infrastructure boom tails off. So let's address each of these points. Now, firstly, we look at that concentration risk. Consolidated Electrical Distributors, they're like one of the largest privately owned electrical distributors in the US with like 700 locations across the nation. So there's a big difference between concentration risk with a distributor and concentration risk with a customer who's purchasing and using your products. So if that single customer goes away, there goes your revenues. But For distributors, it's different because you have loads of customers on the other side of that distributor who are demanding your products. So your end customer is much more diversified than just that single distributor. So we look at distributors, the concentration risk for distributors as being less than if it was a customer. In this case, you have Sunrun. They're the largest residential installer in the United States since they acquired Vivint. So that would be a risk, but they say more riskier than the consolidated electrical distributors concentration risk. So we acknowledge this. It's difficult to say what the breakdown is. So they said 30% between these two firms. So let's say it's 15 each. And it isn't anything too dramatic. It could certainly be given a pass. So that's how we evaluated that. When it comes to utility versus commercial versus residential, this was an interesting slide from the SolarEdge investment deck that looks at how they're going to be focused going forward on commercial and utility. And you can see here that they believe their residential portfolio is complete, and now they're building their utility portfolio and commercial. So we like this focus, we like this mix, and that bodes well, although we don't have a breakdown between these three categories. The company's stated desire to move in the direction of more commercial and more utility is certainly desirable. We'd also say that Morningstar had published a piece which said that commercial versus residential was about 50-50 based on SolarEdge's revenue. So take that for what it's worth. And then this idea of solar infrastructure purchases tailing off over time. When we look at a company like SolarEdge that sells a lot of hardware, we want to see them also having complementary revenue streams alongside the sale of hardware. And what you see here, this is taken from their investor deck. It's rather interesting. So from 2020 to 2021, this category of what they call non-solar, and in the 10K, you'll see it reflected as all other. It actually represents 5 different categories. So things like UPSs, battery storage, solar automation, things like that. There's actually 5 categories. And in the research piece that we wrote recently on SolarEdge, you can read more about them, but they are collectively grouped into this bucket, and that bucket is growing quite well. So it's now 10% of total revenues. It's up 70% from last year. So that's certainly promising and something that we would keep an eye on. The other thing we'd mention here is that the lifespan of SolarEdge products is 25 years, and that also happens to be how long they provide their clients with free software. So when they get to the end of that 25 years, it's highly likely that they'll be there and say, well, all right, your hardware is now quite antiquated. Let's replace it for you, and we'll extend your software agreement by another 25 years. So around the time, hopefully, that growth starts tailing off, there will be revenues in the form of replacement products. So that's certainly something to consider as well. Now, when we look at SolarEdge revenues by geography, this is very compelling. So you don't want to have a lot of your exposure tied to the United States when things, or say any single country, when things can change very quickly. You can see recently Next Era Energy talking about how they're not happy with the current administration, how they're handling the import of solar panels because it's potentially going to impact their solar growth plans. And that sort of stuff creates a lot of volatility, the regulatory risk. So you can see here that only 40% of SolarEdge revenues come from the United States. Contrast that to Enphase, which has 80% coming from the States. And then you can also see in the bottom here, the growth from year to year. So there was strong growth in Europe, also the rest of the world, and that growth exceeds the United States. It's also interesting to see how much they're selling into the Netherlands as well. So this is something to keep an eye on from year to year to make sure that they're expanding outside of just the United States. And then when it comes to revenue growth, a couple things here to note. Firstly, on the left-hand side, you can see that this is a company that's enjoying tremendous revenue growth alongside profitability. And I believe if you net their cash out to debt, I think they have $600 million in cash. So that's great, because if funding dries up, they're in a good position, right? So they're a profitable firm, at least over the past 4 years. And then when you look on the right, this is their quarterly revenue growth, nice and consistent. You'll note there that around the time of the Rona, they had a bit of a stall for a couple quarters. Well, one fell and then stalled, and then it continued climbing. So it's great to see this consistent revenue growth over time. And then when we look at valuation for SolarEdge, they wouldn't be considered excessively overvalued. You can see them here with a valuation ratio of 6 compared to Enphase at 13, and then compared to solar installers that average about 2.5. So what's the takeaway? Well, shares of SolarEdge could double and then be valued around the same valuation as Enphase, or they could halve and be valued around the same as residential installers. And on that note, you'll notice this firm has a lot of volatility in their share price. So over the past 5 years, shares have soared 1,400% compared to a NASDAQ return of about 120%. So there's certainly some volatility there. And they also have an earnings call next week. So we're going to keep an eye and see what happens to shares. Hopefully they get absolutely decimated. So this firm had a lot of supply chain problems in late 2021. So hopefully shares get absolutely destroyed, and then you can step in and buy a quality company for cheaper. So just to conclude, SolarEdge seems to be emerging as a global leader in infrastructure. Solar infrastructure. They claim that they're a leader by revenues for the sale of inverters. And if we want a dog in the race for solar, this is probably the best option right now, though you would expect a lot of volatility around the share price. And if you're an investor in SolarEdge or a soon-to-be investor in a company, you'll want to pay attention to the all other revenue segment, make sure that they continue growing that over time. So please put your comments in the comments section. Make sure to subscribe to our channel. And thank you so much for taking the time to watch this video today.